Hi. I guess I should get my microphone. Anyways, Ted here, Bodies and Wicks. I am bringing you an update. Any kind of update. I'm just looking at charts like I always do. And looking at Ethereum and what it is doing right now. And had a good day today, thank God, because I had been holding on to a long trade for quite some time, because I had seen that it had come up here and made somewhat equal highs, and while it was coming back up, I thought I was going to break them, so I entered somewhere in around here, and then bleh, it did that. So seeing it above that where I entered the trade now, and I'm definitely much, but I knew it was going to get higher. I just didn't know when. Or at least, yeah, I think it was something like that. I don't know why. I knew it. Okay, I'm trying to figure out why I got in. Because I had to do something with either equal highs or, well, we broke these equal highs. Somewhat equal highs. They're not exactly equal, but they're similarly equal, right? So we broke those, and it was the comeback down, and I think I just thought we were going to continue being bullish, and that's when I got in, because I thought, yeah, I thought we'd continue on until we hit this swing high up here. Now we're about to hit, or now we're hitting an order block. So, order block, look over here to the left. I am on the 4-hour chart, so this might have a big, might not have a big reaction right now because it's hitting the wick of it. So I am going to address the body of it instead right now as well. And text. You got, actually, let me put that back on and just use that as the order block. Okay, there we go. So it stays inside the daily order block, but as it gets, or the daily fair value gap, but it bounces back into this daily order, the daily order block. It's actually a breaker block. If you want to, we want to be 100%. Sorry, we want to be really specific about it. This is a breaker block. Why? Because it's a low, a high, a low, and then a higher high. This high creates a liquidity, and then it breaks liquidity after that, creating a breaker, or a breaker block. Now, if it would have broke down through the opposite way, then basically what this is doing is acting as support, right? So instead, so if it would have went straight down through and then coming back up would have been an issue, because then it would have still acted as, well, they would have acted as resistance at that point. So that's how you know where your support and resistances are. You know, people try to guess where support and resistance is. It's easy to tell. It's easy to find. Find your breaker blocks. Find your order blocks. That is going to be your support and resistance, right? But even though I thought it was going to come down into the fair value gap, it would have broke the resistance, you know, that I thought was there. Well, I didn't actually realize was there until later. Then, you know, if I would have seen that before, I would have realized it would have never came. It wasn't going to get as low as I thought it was going to, because I was actually holding off and waiting for it to get lower, and then I was going to put a lot more in and wait for it to take off. But instead, it only got this low, and I didn't. Once it started, I think I started putting more in once it crossed, or got into this fair value gap, this daily fair value gap here. So Um, and once we get into closer, I'll show you. So the daily or 4 hour fair value gap. Once we get closer, I'll show you. Once I once I saw it, start getting inside of this. Sorry, I thought I had my mic off for a second. And it was pushing forth. That's when I knew that it was going to continue higher, and that's when I jumped in and put more money in, basically. So if you look at the hour, you can see. I mean, if I don't know if the replay will do it any good, but we could probably maybe do a replay of watching. Yeah, well, yeah, you see it. You saw when we did the replay, it jumped up into it, and then it pulled back really quick. Here, I'll slow it down, and we'll do it again. Oops. Alright, jump to right here. We'll do it right before the candle. Hit play. We're going a little bit slower this time. Now watch when it gets to this candle. Boom, goes right back up. Wait, it didn't pull back. Alright, hold on. Because on the fast one, it was showing... Because I know it did. It pulled back really quick, and then it pushed back up. We're going to jump to... Yeah, let's jump to right here. Well, I pulled back a little bit too far. Speed. See, got that in there. Pull back up, and see, it's acting as resistance. See, there it was. The red, did you see it? There it was. Big red spike. So that means it pushed back up, pulled back down, and then started coming back up. Once I saw it push back up into that fair value gap, that's when I knew that we were going to be going higher. Because otherwise, once you get into like I said all the time in my videos, and if you jump into a fair value gap, it'll start pushing the opposite way. If it doesn't want it there, it's going to push it back out of the way, and then we'll start going the opposite direction. But I've been bullish on Ethereum, and so I held on to it, and that's when I put in a second position. Was when it started moving up again in toward this 4-hour fair value gap. Well, I'm in the hour, so I don't know why I just moved that, but whatever. All right. Anyways, so now we're at the order block. It looks like we easily made it through the order block. Or was that even an order block? Let's go check it out. The computer is being a little slow right now. I don't know why. I just turned it on. Yeah, I don't know if... I mean, that's the beginning of an order block, I guess you could say. I wouldn't see too much resistance. Come on now. Come on now. Probably because I have too many charts open. Alright, so I'm calling this an order block because last down move, it has the up, down, up. Alright, so the same thing we saw earlier. You have your up move, down move, your last down move here, and then it goes up. And you know, this creates liquidity. This jumps right through liquidity. So that's why I would consider this a order block and a negative order block. So I could draw a square around this. So let me do it. But actually, while we're over here, let's just go ahead and take a look at these others. that I have marked as order blocks as it moves towards them as well. Because again, right here's my next goal for my take profit, and it's because it's the next swing high. And even though these highs are relative, almost equal to these, I have a feeling what we're going to see is we're going to see a spike through this, and then probably another retraction. I don't know how far, how long, but then it'd eventually go back up and then finally take out these guys. And that's what we want to see. So first, that one is a negative order block. Alright, and then the last one, this is not, this is where I had it earlier. Why did it move? The body of the order block. There we go. Body of the order block of the last up move before the down move. Oh, that's because I had the 4 hour. That's probably why. So this is the 4 hour here. 1, 2, 3, and 4. Yep, that makes sense. Alright, so here we have the 4 hour order block wick here. Here we have the body of the 1 hour for order block here. And then here we had an order block here. I wanted to watch these levels to see if there was going to be a negative reaction after we made it past some liquidity points, meaning some highs, which would be this one here, right? This was the next high I was looking at because it also just right above that high there's an order block, and it's also in between a fair value gap. So this could be an easy place for it to retract, or at least hit, stop, start reversing, right? If it doesn't, I wouldn't be surprised about this one either. I don't like this one, but I wouldn't be surprised if it hits this one too. I see another green 1 hour candle. I'm gonna go down to the wick on this one instead of the body. Just because it is wickish, it's a little bit more wickish. So you have a down, up, down scenario, and this one, this candle right here, totally just. After this low right here creates liquidity, right? So it just went right through that liquidity, right through this liquidity, and then kept going. Finally comes back up and then touches this one, right? This low here before it starts dropping. But that was the low. Jeez, you know what? I'm doing everything right behind my... I am going to pull my head out of here. Because I'm doing everything right behind my head. So, I'm going to have to re-explain all of that. Alright, so... as you can see, over here, right? Where this little spike of a green is, so that would be your up candle. You have an up down up scenario, like I said. So this would actually be a breaker. This green candle right here would definitely be a breaker candle, and then that's why whenever it's dropping and it's breaking that liquidity, it turns around and it comes back up, because that breaker is, again, the liquidity. So it's seeking to find that liquidity. People think it's a resistance point or something of that nature, which it basically is. It is a resistance point, and it got a little bit up into it and then dropped after that. So, but now we have this block as well. So you still have a up, down, up scenario. So that's why this is also an order block, because it would be your last up candle before your down candle. So you kind of have these two candles together. That's why I'm not counting this one here, because these two candles together would basically be the same candle. And then it kind of consolidates a little bit up here at the top before it finally drops. It breaks this liquidity over here, right? But it doesn't break this liquidity over here. Why not? Because it hits the order block of these, as you can see here. Why did it do that? I don't know. I don't want that. I want this trend line here. We go from the body of this last up candle before it drops, and we bring it all the way over into this area. You can see how it spikes up into it, doesn't close above it. So if it was going to close above it, I would say it would be more bullish. But since it spiked into it once, 2, 3 times within 4 hours, finally drops after that, now we see where the bearishness comes from. So now that we are on a kind of a bullish run here, I was checking my phone. see where I was at in the trade. Looks like it pulled back a little bit, but I'm not exactly for sure where we're at, because all I can see is numbers. So we haven't gotten to these order blocks up here yet. Equal highs of at least. I don't know where the equal high was over here. It must have been like a little 5-minute thing or something where it pushed up into it. I don't know. But what I'm going to do is not, this is actually done with. I'm just going to remove this from the chart because momentarily, and go over here and do a horizontal ray, and we're going to horizontal ray this wick right here, and that is definitely what we're looking at right now. So we're looking at equal highs. And this is where I screwed up last time after it fell back just a little bit. And then after it pushed up, I started buying in thinking it was going to break it. So I am taking profit right now. Hold on. And if I wasn't watching that Ethereum, I would have been able to take a little bit better profit, but it took about 95% of my profit, left 5% on. Then I've been adding. Ever since I've got into this trade a long time ago when it was at the very bottom here, I've been adding and taking profit along the way. So I don't know where that just came from, but can we delete it? Yes. Okay. I've been adding and taking profits along the way. So this big green stretch has been a big money maker for me, and I'm enjoying it. So that's why I just took profit, because we are at equal highs, meaning it will get above this. Okay, it will get above these equal highs. All right. So what has just happened, if you don't understand smart money, is that it has created liquidity. So now people see this as resistance, right? If you see, two, different areas that are two different, parts of a chart, candles, going up to the same price point, same price area, stopping and then turning around, going back the other way, you're gonna automatically think, that's a resistance area. What the crap just happened? So God, I could have waited a little bit longer and got a little bit more out of it, but oh well. Or no, I wouldn't have. It's actually falling quite fast. But we do have a 1 hour order block. Right, I'm going to be watching this to see what happens right here. See what kind of reaction we get off of that. Boom. Got a positive reaction off of it. So what I'm trying to gauge here is if this is going to turn around and be bullish and shoot straight up through it, or if it's going to meander around and then try to fall backwards. So I'm just going to watch this candle for a bit. Because what we do have over here is we do have this candle right here is it's not an order block, it's a breaker, sorry, it's a breaker block. So it's getting to the opposite end of the breaker block because this would actually be a negative breaker block. Usually a reaction would happen as soon as you would hit the bottom of this, which it looks like it did here, and that's why it went backwards. Right, so I'm gonna draw. I'm not just making this stuff out of nowhere, guys. I'm really not. This is just part of how the algorithm is. This is what I study all the time. All right, so and the reason it's a breaker block is because you have a low, high, lower low, way lower low, right? Or you can go with the candles next to it if you want. You have a low, you have a high, and then you have lower lows after that, right? So the lower low here, right? Created liquidity, right? Broke the liquidity. So there you can tell. I mean, it became a negative breaker block as soon as basically this candle right here closed below this wick. That's when it became a negative breaker block. So next instinct on these kind of things is when price comes back up to it, is it going to reject off of it, or is it going to continue through it? Because those are the two things that breaker blocks will do. I mean, it'll attract it once it comes back up to it, but is it going to reject it, or is it going to? Because generally it'll reject it and it'll keep going down, or it'll just fly right through. This one kind of did both. It got rejected, right? Came down, and it looks like just a little bit above this wick. I don't think it got any lower than that wick, did it? No. I thought it may have. I thought if it may have got a little bit lower than that wick, it would have been within this fair value gap, and that's what propelled it upwards. But it did not. Which is actually better, because then that's actually mean it's more bullish if it got close to the fair value gap but didn't touch it. That's actually better. That means it's gonna probably propel forward even more, which we saw happen. Now that we have gotten to this equal high, which is also the opposite end of this order block. Now we gotta watch to see where it's gonna go after that. And like I said, I think it's coming down to this area here. Now what I'm also going to do is we're going to get a little bit closer and get in on the 15-minute, maybe a 5-minute time frame, and find out. Okay, so here we have a high. Where was that high broken? Here. Okay. No, that's not going to work out. Okay, so the last time we did have a dip. Okay, we had the order block, right? Then we have the dip here. I'm gonna grab the fib. Let me get into a 5-minute time frame. That way I don't have to worry about the wicks. Alright, boom. This would probably be lower. Alright, 5-minute time frames, whenever I do my Fibonacci's, I don't incorporate the wicks. Actually, there was a dip right here. That came back and hit this fair value gap that I was talking about. Actually, I wasn't talking about this fair value gap at all, but this line down here, sorry, I just moved it. I was showing somebody that's when I entered, or when I had an entry. Just because I thought it was going to hit, maybe, possibly, because it was right next to the 88.6. And with the monthly fair value gap, the bottom of it being that close to the 88.6, I thought it may have just stopped there and went up that way. So I gave it a little bit of a leeway just in case. And then that was my entry. It was like pretty much 38,000. All right, so it came up, and just in case if you wanted to know, Corn Pop was a bad dude. Okay, I hope you got that. Alright, I'm sitting here, I'm looking at this, I'm trying to make some sense out of it right now. I don't know why this moved. This needs to go back over here. Okay, so the reason I'm putting it here is because we did have this shoot up. This is your last. So this was basically a breaking. The breaking of a liquidity point over here, right? I'm gonna move this green line up just a little bit, just so you can kind of maybe back down. Basically, I'm trying to make it even with these highs here, these highs here. It's kind of like a liquidity point here. All right, and also it also hit a breaker block here, so this is basically where you would have liquidity resting. So it broke this liquidity, right? Comes back down on basically on a 5-minute level, and then starts to rise after that. Now this happened earlier today. What time? This is the morning at 9 o'clock. Okay. So I put fib at the bottom of there since it broke the liquidity. Right, cleared the liquidity, closed above it, comes back down. I'll put my fib at the bottom of that, And then I'll put my fib up at the top of here. Probably shouldn't be using, I usually don't like to use the wicks, but considering that candle's only a wick, I don't know what else to do with it. If it was a big, fat, thick candle, I mean, I guess I could put it on the bottom of this red candle here. That's what I usually like to do. And then what I'll do from there is also try to find the smart money area where the people that have all the money are going to want to buy. They're going to want to buy on a discount, right? Well, this is already broken, the liquidity point. So that now that's a broken liquidity point. That basically means that it has been balanced. Now that it's balanced, we reset. Basically, now that we've reset, that's why I'm putting this Fibonacci here instead of all the way down at the bottom, because it's not going to retrace all the way back down into here. It could. I mean, if we put this all the way back down to here, we have this up here, and we're going to talk about smart money. And smart money being basically where people with deep pockets like to buy, which is going to be the golden pocket zone, which is going to be anywhere between the 61.8 and generally the 79, right? Sometimes it gets to the 88.6, which is why I have that also marked. It's rare that it does get there, but if it does get there and you do see a positive reaction, pull the trigger is what I usually do. I'm not giving any financial advice. I am just saying from my personal experience, these are things that I have done. But I do not see them coming all the way back down. We've came all the way up this far. And I mean, for it just to hang around 40,000 and just come fall back down, I don't see that happening. I see it going back up still. So look, it's actually hanging out inside of this order block area now. So now it actually went down to the bottom of the order block and turned around, and it's going back up. And it got close to that, close to that bearish order block. Well, here's a breaker here, and this is probably what it bounced off of. It bounced off of it a couple times. So again, your breaker would have been here. It would have been in your last up candle for the down move. Not the last up candle for, yeah, last up candle for the down move. Or a low, a high, and then a low. You count that last up, you count that last high candle. Not the red candle, you count the last green candle. So I know it can be a little confusing, but this is just how the algorithm works. So now that it's come back down into here, it pulls up a little bit, but now we're seeing larger red candles, right? Considering we're seeing larger red candles, I think we're seeing more bearishness. And we did have we had a little bit of a breaker there. That little wick right there. I don't know if you guys can see it as well as I can. I need to get right up on it, basically. Right here. This little wick right here. To the other side, there you go. Because now you have an up, down, and then it came back up move, right? So now the bottom of this is another breaker. And it came back up, and then after it came back up, it ran right down through the liquidity of it. And after it came back and touched it touched that line of where that liquidity was sitting, rejected, right? And then it stopped again. Bullish candle came up to that liquidity line, rejected. Even went up a little bit higher up into it, rejected. So here we have a nice solid area of a bearish order block, or sorry, bearish breaker block. So this is why I say now we're going to look toward smart money where they want to buy. They're going to want to buy in between this 61.8 and this 88.6. Now I put this here earlier saying, hey, I think it's going to come back into this area. So I already had and there was a reason for that. I've been mentored to only give out specific things, and that was one specific thing I cannot give out to tell you why I thought it was going to come back to that area. But I can tell you that, I mean, people want price at a discount, right? If you want a pair of jeans, do you want it at 30% off, or do you want it at 70.5% off? You probably want it at 70.5% off, which is actually where this red line is right now. It's at 70.5%. So these are usually where the buys take place from smart money. Of course, the 62%, right? That's the main one. That is where the discount of your discount array will start. And then the others below that are where you usually see other types of reactions. And you can see here, this 70.5 over here, we do see the start of a bearish move. So this could be the start of a bullish order block, since it is a bearish move. So the last down move before an up move, right? If we looked at this like a 30-minute, angle, or maybe even an hour angle, we could see one big red candle going down in this area, and then another candle starting here going up. What time was that? I don't know. But either way, this is where that could have started. So we could see it come back down to here into that 70.5 and then turn around and go back up. Or we could see it come back a little bit lower. What I do see, well, I don't know, it's not open. This is kind of open still. I'm trying to find a fair value gap that may be open that hasn't been touched yet, but that one has, so I wouldn't count on that. So come down, I mean, it barely got touched by this candle here. Barely got touched by this one right here. So I think we're going to see this fall down into at least the 70.5 of this Fibonacci wave, or Fibonacci length, whatever you want to call it, that I have, which is at price 39,140 basically. So around 39,140, I think it'll reach down into there. before we start seeing it move back up again. And it could get lower. I mean, here the thing is that even though we did break that liquidity and it did pull back a little bit, here are some, I mean, we have an open, we have two actually. I mean, these are on the 5-minute charts. They're hard to see. So that's why nobody would pay attention to them except for maybe myself and some other smart money people. Whenever they say, you know, a 5-minute chart, you know, it means nothing. You can't see anything to it. Don't worry about it. No, these are actually where you'll find the hidden gems of where price will hit and possibly turn around. So you have two, here we have two fair value gaps right there that have not been touched. And here's another one down here. So, you know what, it could possibly come down farther. And there's another one. That's the thing about when price takes off like that. It doesn't, it kind of, like I said, I always tell people it scares me. It doesn't really scare me. It just lets me know that there's a possibility. There's a big possibility that it's going to retrace quite a bit. And there's another one there. Okay, so, and I am deep in this in a 5-minute chart. I'm gonna get rid of this square here. Some analysis. And this square too. Or maybe this is the square I said it would go. Oh man, I don't know how long. I have been not recording. But that sucks. I just realized that I have been not recording for quite some time. Anyways. Oh, that just made me ill to my stomach. I'll have to rewatch it and find out. But anyways, if we're going back to Bitcoin, again, we're watching this, watching it see where it could come back to, and I'm personally calling somewhere around 39,140. If it doesn't already turn around and go back up, but because it looks like it's going to stay within this order block area, maybe, and then just jump out of it instead of actually retracing all the way back down to a smart money, not a smart money, but yeah, a smart money discount area. Instead of buying from there, it did take out the low level liquidity here. So, and this is, I mean, we're talking about people that have lots of money that know how to scalp, right? So some of those people would think this, that, you know, be a resistance point, and that it wouldn't come down lower than that. So what does it do? It comes down, it creates the exact same resistance point, low point, and then goes up from there, right? So now these people think, okay, I am good on this resistance point, I can start buying now. And what does it do? It hits that breaker area I was talking about, to where you have a high, low, and then you have a higher high after that. Even it's hard to see, but if you really look into this chart, high, low, and it does pop back up after that, higher high, then you have this low point here. That is your breaker. So then it slides right through that, takes out that liquidity, and then stops at this point here. I mean, you can't get any more faked out than that. If you want to fake somebody out and make them think that there is a support level, this right here is how you do it. I mean, look at that. They're all riding on that line. So then what does this next candle do? Boom, it goes up and it hits it, and then it turns around and it falls right through it. So anybody who would have bought there had a tight stop loss, trying to make a quick buck on scalping this, man, they would have got taken out. So that's why you gotta watch out. That's why you have to learn smart money algorithms. You have to know about the breaker blocks. You have to understand what this algorithm is trying to do to people. It's always trying to take people out. It knows where their liquidity is resting, and it's going to attack it. See, I mean, that just, whenever you have equal lows like that, or whenever you have lows like this, and it comes down and makes another equal low, it just makes somebody's brain go, oh, look, support point. I'm going to buy here, and we're going to continue going up. Oh, you can't think like that. As soon as you see an area where you think it's a support point, think liquidity and think, I'm going to break that. Think the opposite. Think the exact opposite. That's the way it works. Okay, so we'll have to see what happens with Bitcoin. It may just go sideways from here on out. I'm not for sure, but I wouldn't be surprised if it does come back down to this 39,140 area. But anyways, that's all I got for you guys. I just wanted to throw a quick video out there because I know I haven't made one in a while. So thank you for watching. Thank you for always checking out my stuff. And if you did learn something, please, what I'd like you to do, hit that subscribe button, hit that like button, hit that share button. Tell people about Buys and Wicks, or that guy named Ted who's really just awkward and weird and just doesn't shut up, and really believes that all the charts, not every single one, but about 99% of the charts are controlled by an algorithm. And I'm trying to prove it to you every day, right? I'm trying to prove that to you every day. It's been proven in Forex, and with that's why I learned all this from, was through Forex. Right? I'm just taking it to crypto, right? So it's in your futures, right? It's in the oil, it's in potatoes, it's in meat, it's in lumber. All of this stuff still applies to the charts. Doesn't matter what it is. It's all there if you go back and look at it and you learn how to study it. So my advice to you, go to Inner Circle Traders YouTube channel, learn everything you can, and then learn it again, and then learn something from somebody stupid. No, I wouldn't say somebody stupid. Learn something from somebody who is a good retail trader. All right, that's what I would suggest. Learn from somebody that's a good retail trader, and then go back and then watch ICT's videos, or think about ICT, and then you'll understand. You'll understand where the retail people are going wrong at all times. It'll make you face palm. You will face palm so hard, so much. Every time I watch somebody's video about and they put like a triangle in there, and I'm just like, or a channel or something like that, or a trend line, and they're like, it's gonna go off this, it's gonna bounce off this triangle line, and it makes me face palm every time. Price doesn't do that, guys. If you haven't watched anything I've done for the last 40 something minutes, you see what price does. There's different levels in here. Price reacts off of its other levels that it has made in the past, whether it be a 4-hour chart, a daily chart, a 5-minute chart, a 15-minute chart. It's reacting off of those levels. It has nothing to do with a crab or a shark or whatever harmonic pattern you believe it is, or Elliott wave or anything like that. None of that matters. The only thing that matters is the algorithm that the big men put in play and how you can play against it. And that's what I'm trying to teach you here, okay? Thank you guys so much for watching. As always, wear your pants.